Most people don't win the money game not because they don't make enough, but it's because they don't understand one simple concept, and that's buying assets versus liabilities. Today, I'm going to break that down in simple, plain English to help you understand how you can then implement buying and building assets into your financial plan to help you become financially free. So let's get cooking. There we go. All right. The assets versus liabilities, the money game. So here's the plain, simple definition of assets and liabilities. Assets put money in your pocket, and liabilities take money out of your pocket. Assets can be a number of different things. They can be skills that you have. They can be paper, like equity that you have in a company, or stocks. They can be tangible resources. We'll get into some of those as an example, like a rental property or a vehicle or some type of equipment that you might rent out. Liabilities, on the other hand, are things that take money out of your pocket. And there are many things that most consumers end up buying, thinking that they're assets, that are actually liabilities for them. So let's go through a few of those examples. The first one, and the biggest one that is often conceived as an asset, is your house. Now, it can become an asset, but when you have a primary residence, you buy, that house is actually a liability for you for a few different reasons. Most often, you're paying a mortgage on it. You've got taxes that you pay on it on an annual basis. You've got insurance and maintenance costs that are involved in it. And all of this is taking money out of your pocket, whereas it's not producing money for you. Now, people often argue, but your house increases in value over time in most time periods. While that is true, it's not actually generating cash flow for you until you sell the property. So because of that, it's not actually an asset that's providing you financial capabilities. Now, there are creative financing strategies that I won't go into in this video that can make it an asset, but the house overall, when it is your, again, primary residence, where you're living, isn't actually an asset for you. A financial asset, that is. Another one is your car. Again, most people will purchase a car and it provides them utility. They can drive it from point A to point B. The thing is, the moment, especially if you buy a brand new car, the moment you drive it off the lot, it loses value. And it will only continue to lose value over time. And we've been in a very weird, strange period for vehicles in the US over the last handful of years where used vehicles have retained their value a little bit better, but at the end of the day, they are still depreciating value, meaning they're losing value over time. You've also got gas and repairs that you have to pay for, again, insurance on your car, and all of this is taking money out of your pocket, not producing money for you. Now, one way that you can flip this is if you use like an app called Turo or other, I don't know other examples off the top of my head, but where you take a vehicle and you rent it out, like a taxi service or an Uber, right? Someone can rent that vehicle for you or from you, and it's providing you cash flow. Another example where it's actually a tool is Uber. If you're an Uber driver, the vehicle itself then becomes part of your equipment that allows you to take write-offs and other things for the car as a part of your business if you set up yourself as a contractor or a business. So there are ways to make it an asset, but in most cases, people utilize a car as a consumer utility vehicle, meaning it's a liability for you. Now, we talked about a couple of different cases of liabilities. What about assets? Most common one that people will think about is real estate. If you own rental properties where you charge a monthly rate, There are certain expenses that you pay on a monthly basis for that rental property, and including some of the stuff we talked about before, maintenance, insurance, all that stuff. That often gets baked into the price that you use as your rental property, rental monthly rent. But at the end of the day, you're profiting money off of that property from the renters, right? You might, in this example, you're profiting $500 on a month-to-month basis, which then you can build that up over time, buy another property, where then you're accumulating a portfolio of things, of real estate that you're renting out, and you'll continue to grow it in value, but it is also providing you cash flow. That's the most important thing, that is providing you cash flow, is putting money in your pocket, and reasonably on a month-to-month basis. Other things could be if you own, like we just talked about with the car example, if you own a fleet of cars that you rent out using the Turo app again, or if you rent out like bicycles or electric scooters, or if you own heavy machinery equipment, like construction equipment, and you've acquired a vast fleet of different types of vehicles that you rent out to contractors, all sorts of different examples. But again, the point is, these things are providing you value. Now let's talk about skills really quickly. The great thing about skills, when you acquire a skill, you've learned how to do something. You've learned how to manage finances. You've learned how to sell. You've learned how to do copywriting. You've learned how to create ads and marketing. These skills are then things that you can deploy, and it provides you financial return. The thing is, those types of skills, they're always dependent on your time unless you are able to build systems around them. So again, I won't go deep into that, but again, skills are also an asset for you. And if you can learn to build systems and build scale around the skills that you have, you can build a business around something, and that becomes an asset for you as well. So, in conclusion, or as we kind of get through things here, the wealth game is really about building and acquiring assets that generate income for you. And we want to take our mindset away from buying things that are liabilities disguised as assets. Again, like a primary residence, a car, all sorts of equipment that you again get utility out of, but aren't generating cash flow for you. And there's nothing wrong with those things. Again, if you are trying to win the money game and become more wealthy, you just have to realize that that's where you're putting your money instead of in other vehicles that are generating income for you. So, question to reflect on for yourself. If you can jot this down on either notes or a piece of paper, if you use Google, I'd recommend writing it down, because it's kind of a shock when you actually look at it and you handwrite it out. But again, you can use Notion, Google Sheets, whatever, to just document all of this. Do you own things that put money in your pocket, or do they take money out of your pocket? And it'd be good to just get a sense of where you were at, because that will help you build your roadmap to where you want to go with your financial goals. So, close this out. Hopefully this changes your perspective a little bit on what the money game is and how people can accumulate wealth over time by building assets, acquiring assets to achieve financial freedom. And if this was at all helpful to you, please hit that subscribe button below. I'll have more videos coming out, and send some comments, or if you've got questions or comments, please share those in the comment section below, and we will see you next time.